Hey traders, welcome back to Valareso Capital. On today's episode, we're gonna go through the weekly watch list. We're gonna take a look at some of the trades that I have currently some exposure in. So we're gonna cover those names, and then of course we're gonna go through the markets. And also I'm gonna share with you some insights that I have been making basically during this entire year about my results, about what setups are working. I'm gonna talk about some of the little changes that I have been doing in my trading and something that I think that I'm gonna start doing moving forward with my trading. So if you wanna know all of that information, make sure to stick all the way to the end of this video. And remember, guys, that this video is for just informational purposes only and is not financial advice. So let's just get into the charts, right? So first of all, here I want to share with you a very important chart, and this is the volatility of the VIX futures, right? So basically this is the volatility index. This takes into account the volatility of the options contracts in the S&P 500, and this is the future contracts of the VIX. So I know that most of you are familiar with the VIX, but something that I want to show you here, and if you have been following the channel lately, you have seen, and let me just take some of the indicators out of the way so we can have a clearer chart. So let me take these quant pivots out of the way, also these calendar channels. And also let me take this ADR, and we can also take out this volume. That way we have kind of a cleaner chart. So back to the video here. If you have been following the channel lately, you can see that I have been using the Anchor VWAP. I recently bought the book by Brian Shannon. He talks everything about Anchor VWAP. And this is actually a fantastic tool. So I'm incorporating this tool more and more into my trading. I'm starting to learn that it's very important to anchor this Anchor VWAP from very important swings. And the most amazing thing is how accurately this Anchor VWAP actually works. So this is actually pretty interesting because I didn't know that this was actually going to work in the future contracts of the VIX. So if we go back to the chart here, you can see that during this pullback that we had on the SPX, the VIX of course rallied, right? Because we tend to see a counter trend move in the VIX when we have a certain move in the SPX. So you can see that we came into resistance right here, but most interestingly, we actually came into this Anchor VWAP. This Anchor VWAP is anchored from this high of 28.40 in the VIX futures contracts. So it's actually pretty amazing to see that we actually came into that level. We stopped right there, and you can see that we had a really strong selling day in the VIX futures contracts. You can also see here in my momentum indicator that the momentum continues to be bearish, even though we had a little bit of a kind of a if we take a look at the indicator that I have on my charts, we have two lines, right? We have the black line, and then of course we have kind of this color line. The black line is usually the most important trend that we have in a certain security. The color one, usually when we have the color one going above the zero line, that's usually when we can expect some pullbacks. We can expect some, in this case, we can expect some kind of a snapback rally. But as long as the black line continues to be below zero, most of the time, in a probability basis, in a probabilistic thinking, we tend to see that snapback rally or that pullback coming into resistance or support, and that's exactly what happened. So you can see right here that we had this color line, this kind of short momentum going above the zero line. You can see that we actually had a snapback rally, but we came right into resistance. And the probability of this resistance actually holding increases when we have the black line continues to be below zero. And that's exactly what we had. And of course, that combined with the Anchor VWAP and of course combined with the price structure, you can see that we had a really high probability setup, or a high probability understanding that the pullback that we saw last week on the indexes was actually probably an opportunity to get some bullish exposure for the next move, for the next continuation to the upside. Now, what is the expectation with this chart? The expectation with this chart is that at some point we're going to break out these lows, and then the next levels of support are going to come somewhere around 17, and then the next one is going to come somewhere around 15. You can see right here that the momentum continues to be negative, and this is actually pretty bullish for equities. So let me jump into the SPX, and then we're also going to take a look at the ES futures. So if we come right here into the SPX, and let me just hide this alert that I have right here. If we come right here into the SPX, you can see that we actually have kind of the opposite. You can see right here that the price actually came into these anchor VWAPs of support, right? You can see that I have one anchor to the high of 4,195, and you can see that I have one anchor to the most recent swing to the downside that we had. You can see that both of these anchor VWAPs actually came into this level of support. And what is really interesting is that, of course, we also have a very important level of support. We was 4,050, and you can see that we, of course, have a lot of support in terms of price action. So that was actually a pretty strong level of support, and it's really important for us to understand that given the fashion of how the market is moving, we have to understand that the market right now is moving, given the volume and everything, is moving based on the SPX a lot. So most of the time, as the SPX goes, most of the stocks also go. So if we are seeing the SPX coming into support, then most likely all the stocks are coming into support. If we see the SPX bouncing from support, then most likely we're gonna see most of the stocks also bouncing from support. So that's something really important to understand. And in terms of my momentum indicator, you can see that here we have the opposite from the VIX futures. You can see right here that the black line is actually above zero, and you can see that the red line, or the short momentum line, was below zero. So that is basically just telling us, hey, we're probably not gonna see a very quick continuation from the last move. We're most likely gonna see some very choppy pullback or consolidation in the SPX, and that's exactly what we're getting. And the expectation is, of course, let's see if this short momentum can get above zero, and then we're gonna get some more continuation of the long-term momentum, and that's usually when we get those very strong directional moves. Now, this is something that I want to show you. We have some very, very important levels right here at 4,300. The first level that we had, of course, we have supply based on price action, but we also have some Fibonacci levels. If we actually make a Fibonacci extension from this high right here all the way to the low that we just saw, you can see that we're coming all the way to 4,300. And something really interesting is that if we just zoom back here a little bit, if we actually make a Fibonacci measurement from the high that we had in the bull market all the way to the low that we had in October, you can see the low right here at 3,490. You can see that we have a 0.618 retracement, Fibonacci retracement coming at that level as well. So 4,300 is going to be a huge level of resistance. And the way the market is setting up, I think that we're going to see that move probably this month, probably in the next couple of weeks. So this one is looking pretty interesting. I think that you can play the SPX. You can play the SPX with the SPY. You can buy long calls. You can buy the stock. You can play it with leverage ETFs such as the XPXL. Or you can also use the SPX, right? Get some exposure using the options contracts. So I think that the market is setting up for a very strong move to the upside. And the most important thing is that we are ready to participate in the move, because as traders, what we want to do is participate in the high probability moves. And I think that the SPX is setting up for a very strong move to the upside. So that's something really important. And now that we cover that, I think that this is the only chart that we need to cover. Let me just show you the trades and the active positions that I have currently. So first let me start with the QQQ. So to be honest with you guys, it was not my best week of execution, right? Fortunately, the thing is that the QQQ actually held support, which is actually pretty interesting, pretty bullish, but I didn't have the best entries, to be honest. So for the QQQ, I was actually looking for a breakout. So I actually got involved in the breakout, and then of course we came back into support. I added the day that we came into that first level of support. I added that day, and then of course we ended up coming a little bit further into the 21 exponential, and then of course we're now getting consolidation. So right now that position is positive, and that position is actually in the TQQQ, right? So if you can see that the TQQQ, you can see my buy orders right here, and you can see that I have a long stock position. This long stock position is in an average of 28.05. So I'm currently up in the position just slightly. Didn't have my best entries, right? But this one is looking pretty awesome. You can see that the momentum is bullish, and you can see that we have a squeeze, and overall the pattern is looking pretty amazing. And most importantly, we held the 21 exponential moving average support, and now we're looking for more upside in this name. Next, let me share Google. Google is a position that is actually looking pretty nice. And of course, I was executing Google based on the action that I was seeing in the QQQ. So of course I was looking for a breakout. So I actually got involved in Google on this day right here. And then I added on this day right here when we had the pullback. And you can see that I have an average exposure of 106. So I'm a little bit red on this position in Google, but this one is looking pretty nice. You can see that the momentum is positive. Of course, the short-term momentum is negative, so that's why we were expecting a little bit of chop, and you can see that we have a squeeze, but this one is looking pretty awesome. If we just take a little bit of a step back here, you can see that we have kind of this cup and handle pattern. You can see right here the cup. You can see that we continue to make higher lows, and then of course right now we're starting to see that tight price action below this 110 level, which is a very strong level. And I'm looking for a breakout here, right? I'm looking for a breakout. First target is going to be into 110.80, and then the second target is going to be into those Fibonacci extensions that are coming at 113. So this one is also looking pretty good. I could have done a better job in the execution, but this one is looking pretty nice. And then finally, I do have a position right here in LRCX, which is Lam Research Corporation. And this one is looking pretty amazing. So this one, I had a better execution. I was able to execute this one a day after. So I was able to execute this one when we actually saw that pullback, that first pullback in the Qs. So you can see that I got my position somewhere around here. You can see that my average is 519.65. This one was coming right into support of that anchor VWAP. Anchor from 536.50. So we were coming into that level of support. I got some exposure. We ended up coming a little bit further into that 21 exponential moving average, and you can see right here that the momentum is actually pretty strong. You can see right here that the short-term momentum is already above zero. You can see that the long-term momentum, which is the black line, is also above zero, and you can see that the squeeze is starting to fire to the upside. And then of course this one is looking just pretty amazing. You can see that we had some really nice consolidation here, and at the same time we continue to have higher lows printed, which is actually pretty bullish. And now what I'm seeing is that we are starting to break out from this DTL, and then of course the first level of resistance is going to be somewhere around 550. But as soon as we break from this consolidation level, then probably we're going to get a move to somewhere around 560 pretty easily. So that's the position that I have in LRCX, which is looking also pretty bullish. And remember guys that I wanted to show you some of the things that I was looking in my trading, and this is the chart that I wanted to show you. So let me just get my drawings. So first of all, you can see that my most profitable setups, and this is something that I was looking, I was comparing all the pullbacks that I was buying, right? Because you know that I'm looking for exhaustion, right? I'm looking to buy those pullbacks. I'm looking to short those rallies, and most of the times I execute those based on the moving averages that I watch. So I tend to use the 8 exponential moving average, the 30 daily simple moving average, and then of course the 21 exponential moving average. What I found doing a lot of analysis is that my most profitable setups are always related when I get my entries at the 21 exponential moving average. So if I'm looking to buy a pullback, then I'm gonna wait for that 21 exponential moving average. I'm gonna get involved in that pullback to the 21 exponential moving average, and those you can see right here that the profit is way bigger than the losses that I have seen. You can see that the losses are represented by the orange color and the profits are represented by the green color. So this one is a very profitable setup, and you can see right here also with the short positions executing at that 21 exponential moving average. You can see that my winners are way bigger than my losers as well. Here is somewhere around 3-1. This one is somewhere around 8-1, probably even more. So this one is looking pretty nice. I will have to give those, I will have to do those calculations to actually know the ratio, but just based on this, you can see that the ratio is actually pretty high. It's actually pretty good, right? So basically what I'm trying to say here is that I'm gonna execute mostly just based on the 21 exponential moving average. That's what I'm trying to say. So in some future videos, I'm gonna be talking about the wave indicator, which is basically just looking at the 21 exponential moving average, looking at the 21 exponential moving average in a closing basis, in a high basis, and in a low basis. So you're gonna see in my charts that I'm using you're gonna see like 3 moving averages that are going together. And those 3 moving averages are basically just the 21 exponential moving average, which is represented. And let me just show you here in the charts. Let me just jump to, I'm thinking, let's take a look at the IWM. You can see right here that I have 3 moving averages. The pink moving average is going to be the 21 exponential moving average, the closing price. Then the green one is going to be the 21 exponential moving average, the high price. And then you're going to see the orange one is going to be the 21 exponential moving average, and that's the closing price. So I'm finding that the best entries are inside that envelope. And basically what you want to do is just continue to follow the trend, right? If you can see right here that when price pops above that wave, then you're looking to buy pullbacks into that wave. And then when we drop below that wave, you're looking to short any rallies into that wave. And then you can just play that and you can make a great living doing just that. So I'm going to make sure to cover these guys. I know that I have promised you some other videos and I'm going to get to them, but this is something that I really want to cover. So that's the first thing. And then the second thing that I want to show you is that I was looking at my most profitable tickers, right? Or basically the names that I trade the most, that are actually making me the most amount of money. And that actually is the SPY, right? So this one is specifically showing the SPXL. You can see that this is considerably way bigger than the other tickers. And you can also see that even I have a really strong, right? You can see that my profits are really big when I'm focusing just on the SPX, and you can see that the losses are really small in comparison to the profits when I just focus on those markets. So what I'm doing is I'm starting to incorporate more and more just focusing on trading the SPY. So that's gonna be via the SPXL, via the SPXS. That's gonna be via the SPY. That's gonna be via the SPX, and I'm gonna start combining different things, right? I'm gonna start looking at options. I have trade options. I have a lot of experience trading options. I have trade options for almost 4 years, so I do have a lot of experience trading options. So I'm gonna start incorporating more of that style into my trading, and basically just focusing as much as I can just on the SPY. I'm really good at trading the SPY short term, also long term. And by short term, I don't mean day trading, but I mean kind of swing trading from maybe like 2 to 3 days, some kind of that average. And then of course looking to swing trade that, going from probably 5 to 7 days. I'm really good at that kind of trading, and I'm gonna start focusing more and more just on the SPY. So if that's something that you have been thinking about as well, make sure to stick with the channel, and I'm sure that we're gonna have a lot of fun doing it, and I'm very sure that we're gonna make a lot of money. So thank you so much guys for watching the video. Make sure to be patient next week. We had a lot of strength finishing the week, so make sure to have those moving averages ready, meaning the 21 exponential. Make sure to be as patient as possible to get your position as close to the 21 exponential moving average as possible, and then you're gonna be okay. So I will see you on future videos guys. Thank you once again. Bye bye.